Good evening, good afternoon, good morning, whatever. Can you hear me? Good evening, good afternoon, good morning, whatever. Can you hear me? Me? Good evening, good afternoon, good morning, wherever you are. This is Toshihiko Yamamoto from Yamamoto Property Advisory in Tokyo. It's 11 p.m. in Tokyo time, Saturday night. I just been to a gym, worked out for an hour or so, and then went to a sauna and have the very nice Japanese style bath, which is good, and refreshed myself. And I thought that before I go to bed, since I could not really do the live streaming last week, I would throw through live streaming. Thank you very much for coming. And I would like to share some market update about the Japanese property market, and also some news. First, the market. This is the report by Tokyo Condo, which is the kind of a think tank for real estate. And this report is about the condominium, 70 square meters, which is very average for Japanese families. 3 bedrooms, we call it 3 LDK, 3 bedrooms and living dining. And as you can see the graph, can you see the graph on the screen? You can. The red is Greater Tokyo, the graph, this one, huh? And this one is showing the market, so shouldn't really not happen like this. I don't know what's happening. Can you see me, or can you hear me? This is the average market price for the 3 bedrooms mansion. We call it mansion, condominiums. The price between 2017 and the latest one was the this report is, I think, as of April this year. As you can see, the price has been steadily going up, and the blue is the Osaka area. We call it the Kinki area, which means Osaka, Kyoto, Kobe. And the green is indicating the average price in Nagoya area. We have 3 big city areas, obviously Tokyo, Osaka, and Nagoya, right? And the Nagoya area is, as you can see, the cheapest, and the Tokyo area, the Greater Tokyo area, is the most expensive area. And as you can see, as the chart shows, the market is still going up, but it's kind of becoming a flat. It looks like it's the market is hitting its peak, right? And this graph is even showing more details of the market segment. And the red is the previous one was Greater Tokyo, which means Tokyo, Chiba, Kanagawa, Saitama, right? And this graph is showing the market segment of the Tokyo, Greater Tokyo. This is Tokyo, And central Tokyo, 23 words, and obviously the most expensive area. And as you can see, I mean, if you're following the Japanese real estate market, you can just watch the Tokyo market because it's the really the best indicator of the Japanese real estate. And this is the central area, 23 words market. As you can see, it's going up, but it's steady, but looks like it's becoming a flat. And blue is Yokohama, and this color, like a purple, is Saitama. And Osaka City in orange, green is Nagoya, and the blue, pale blue is Kobe. So Kobe's average price is almost 1/3 of Tokyo, right? And Yokohama is almost half of average price of Tokyo condominiums. So I mean, Yokohama is a nice place. I mean, depends on the area. And Yokohama is only about half an hour by train. So if you want to buy the decent condominium, maybe Tokyo is becoming very expensive these days. I can't really afford new condominiums. It's I don't know why, but I think because of the very low interest and also very weak yen, which attract the foreign investors. So all in all, conclusion is market is steady, but looks like it's seeing the peak for the time being. But I don't really expect the market will drop dramatically very soon, like U.S. market. I understand U.S. market is kind of collapsing these days, right? Because the Fed raised the interest very sharply, but the Japanese BOJ, Bank of Japan, is still keeping almost fund rate almost zero, even lower than zero, below zero. So which is very attractive for the investors, right? The money for investment in Japan is almost free. So, and also we don't really have the inflation. Our inflation rate in Tokyo last month was something like 4%, which is still very high, and like 40 years high, I think. So people are struggling, including me. I've never seen, I'm late 50s, right? I've never seen this kind of inflation in my life. I mean, except the during the oil shock era, which is, I don't know, maybe early 70s, right? I was a kid, so I don't really have any experience. And after I grown up, I've never seen this inflation before, but it's still 3-4% compared with the US. US is still showing something like, I think, a 6-7%, right? And mortgage rate in the US, I've just read an article last week, and the mortgage rate is again rising in the US, like hitting 7% again, despite the deteriorating market conditions. And the US market, economy is showing pretty good strength, right? But the Japanese yen is very weak again. It's now 140 against dollar. So it's again very attractive exchange rate for foreign buyers to buy the any assets in Japan, including the real estate, because a few months ago the yen became stronger, like 127, and but it went back to 140 again, and because the US Fed raised the interest very sharply, so US dollar became very strong, right? And the yen was keeping the BOJ was keeping the interest rate so low, very steady, and during the course of the process, the yen became very weak. Dollar became very strong against any currency, including yen. And but the U.S. is still raising the interest, but it is said the U.S. is maybe next FOMC meeting, it will be the last interest rate raise, like 0.25, 25 points, basis points, and which will be the last interest rate raise. It is said so, which means it could be the good timing to buy yen for you guys, foreigners. For us, yen's purchasing power is becoming very, very weak. So it is, everything is very expensive if we go overseas. Like my friend just been to US, and he was so surprised to see how expensive America is. Like if you go to the McDonald's, you have to pay something like double in the US. So he was, which means Japanese are becoming relatively poorer and poorer because of the unfortunately the very low wages, and average wages income of the Japanese businessman, salaryman, it's not really going up for a long time. It's been stuck like 30 years.